Imagine using crypto with all its benefits like fast transactions, low fees, but with no wild price swings. Well, that's the promise of stablecoins. But with their rise comes a huge question: should they be regulated to prevent potential chaos in the financial system? And in today's video, I'm going to be breaking down how the UK is stepping up to regulate stablecoins and what this could mean for the future of crypto. Stablecoins are quickly becoming a dominant force in the world of cryptocurrency. These digital assets are designed to maintain a stable value by being pegged to traditional fiat currencies like the British pound or the US dollar. Now, this gives them a unique position in the crypto space because they offer the benefits of cryptocurrencies such as fast transactions, low fees, and decentralization to some degree, but without the wild price fluctuations that make assets like Bitcoin and Ethereum hard to use as, everyday money. But as their use grows, so does the concerns about their role in the global financial system. And the UK government has now taken notice, and it's not just sitting back anymore. In fact, it's making moves to regulate stablecoins, but why now? And how will these changes affect the crypto ecosystem? Well, that's what we're going to be diving into today. So stay with me as we explore what's going on with stablecoin regulation in the UK and what it means for the future of digital finance. Now, before we get into the specifics of the regulation, let's break down what stablecoins actually are. At their core, the stablecoins are a type of cryptocurrency that is pegged to a reserve asset. And this asset is usually a fiat currency like the US dollar or the British pound, or sometimes it can actually be a commodity like gold. Now, this peg ensures that the price of the stablecoin stays relatively constant, unlike the volatility that we've seen in other cryptocurrencies or the other commodities in general. Now, stablecoins are used for all sorts of things, international remittances, sending money back home, DeFi applications, and even collateral for loans. But here's the thing. While they're designed to be stable, there are actually growing concerns about whether the infrastructure behind these stablecoins can actually maintain that stability. For example, if a stablecoin issuer doesn't have enough reserves to back up every coin in circulation, things can get ugly very fast. Imagine if people started cashing out their stablecoins and the issuer didn't have enough in reserve. This could trigger a run, similar to what we saw in the 2008 financial crisis. And with the rise in adoption, the risks become greater, obviously, especially as stablecoins are starting to be used for more everyday financial transactions. And this is where regulation comes in. So, how is the UK planning to regulate stablecoins? Well, the UK government has already started laying the groundwork for with the Financial Services and Markets Bill, which aims to bring digital assets, including stablecoins, under more stringent regulatory oversight. And this bill will give the Financial Conduct Authority the power to regulate stablecoin issuers in much the same way that traditional financial institutions are regulated. So what does this mean in practice? Well, it means that if you want to issue stablecoins in the UK, you're going to have to meet certain requirements. First off, you're going to need to prove that your stablecoin is backed by adequate reserves. And this isn't just about holding, fiat pounds in a bank account. You're going to have to be transparent about your reserves, and you're going to have to make sure that they are liquid enough to handle any potential demands for redemption. And secondly, stablecoin issuers are going to need to put in place proper governance structures. This is going to include ensuring that there's enough oversight to protect consumers and investors. And it also means having contingency plans in place, if things go south. Because as we know from history, things can sometimes go wrong in the financial world. And these regulations are bound to have a big impact on the crypto space in the UK. Let's start with businesses. For crypto companies, especially those looking to issue or use stablecoins, this means more compliance, more oversight, and more paperwork, unfortunately. And yes, there is definitely a cost to all of this. And smaller companies, I imagine, are going to struggle to keep up with this increased regulation and certainly the increased costs of doing business. Now, the government argues that there is a silver lining because with regulation comes legitimacy. This can help crypto projects attract more institutional investors, for example, who might currently be hesitant about the lack of regulatory clarity and might see it as a little bit more risky if there's no regulations in place. And it also means that companies will have to keep their operations more transparent. You know, these days of anonymous or obscure crypto companies are going to be coming to an end, certainly if you're based in the UK. And this can actually be a good thing for investors who want more security and trust in the market. Now, speaking of investors, how will these regulations affect them? Well, on the positive side, clearer rules mean greater stability and protection. You know, if a stablecoin issuer goes under or is found to be mismanaging reserves, investors will have recourse through regulators, so they can't just run away with your money. And that's if it's purposeful, you know, like they're purposefully trying to scam, or if they just, you know, inept and lose the money because they were silly with it. So it can also prevent some of the shady practices that we've seen in the past. But with tighter regulations, businesses might end up passing on their added compliance costs to consumers, and some small innovative projects can end up just getting literally pushed out of the market. So in short, these regulations have the potential to bring more security and trust to the market, but it could come at the cost of innovation and market diversity. And as we look ahead, the UK government's approach to regulating stablecoins is almost certainly going to evolve. You know, the government has said it wants to foster innovation, but it's also clear that they're not going to let the crypto market operate without oversight. So how will they strike that balance? Well, it's a fine line between encouraging innovation and preventing financial instability. And one thing that we're likely to see in the near future is a continued push for this global regulatory alignment. You know, with crypto being such a global industry, the UK isn't going to, you know, regulate in a vacuum. You know, the government's going to likely seek to align its stablecoin regulations with international frameworks, such as those from the Financial Stability Board, or the FSB, or the European Union's MiCA regulations, which are already moving towards bringing digital assets under a more, you know, formal oversight. However, there's still a lot of unknowns. You know, how is the UK going to deal with decentralized stablecoins where there is no issuer? You know, that's going to be a big, big question. And will they regulate algorithmic stablecoins differently than fiat-backed ones? You know, these are just some of the questions that regulators are going to need to answer as they try to fine-tune the details of their framework. And ultimately, we may see more clarity on the regulations as the government continues to work with crypto stakeholders, but the question remains, will these regulations create a stable and secure crypto market, or will they make the UK less competitive in the global crypto race? So what's the bottom line here? Well, the UK is taking a big step in regulating stablecoins to ensure that they don't destabilise the financial system. But as with any regulatory shift, there are pros and cons. You know, on the one hand, we're going to see more secure and trusted crypto market. That's what the government will have us believe anyway. But on the other hand, you know, some of the smaller, more innovative players might get left behind. And as the government continues to refine its approach, it will be interesting to see how the stablecoin landscape evolves in the UK. You know, what do you think about the UK's approach to stablecoin regulation? Do you think it'll create a more secure market, or could it hurt the crypto industry's growth? Drop your thoughts in the comments below, and if you enjoyed this deep dive, don't forget to like and subscribe. Thanks for watching, and I'll see you in the next video.